August 3rd, 2021. And right from the get-go, we had been on a mad tear of M&A, trying to acquire as many properties as we could with the simple business plan of being, buy low, anticipating the overall resource market to shoot up the way that it has over the last couple of years, and effectively sell high, right? In doing so, we went from 1 to 20 projects over about 18 months, and that was aggressive to say the least. The biggest bulk of that came through a total package acquisition from a fund called Waterton. And so we acquired 16 projects at once. Now, having said that, we could have acquired the Peruvian assets right off the get-go, but we would have diluted the company 95 odd percent and realistically, just been, I guess, really a shell to that entity. So what we had done instead was move through this value creation ladder, and thereby, when we did acquire the Peruvian assets, we only diluted something like 23% of the company. So, ultimately, we created value through that. We have been selling the assets, divesting of the rest of the portfolio, trying to keep the crown jewels, as it were, and cherry picking the best of the best. But we've also sold off some that were sweet deals like Maverick Springs to help the company grow. So it's been very aggressive, but at the same time, the 1.0, I'll call that whole era the 1.0 era of the company, that is complete, absolutely. And we are absolutely laser focused on developing Lucero, as well as some regional M&A that would be proximate to Lucero in Peru. Well, first and foremost, the mine was discovered back in the 50s. It had been in production in various phases, smaller scale phases, through the 50s, 70s, 80s, and then finally 80s, 90s, up to the 2000s. In its last era of 1989 to 2005, Lucero was in production under the wing of Buenaventura, NYSE listed $4.5 billion market cap company, which in their corporate history, you can see that it helped them level up. But let's just say that today they're a far different and far larger company. Lucero isn't exactly a major point of interest for them, given the scale of what they are working on primarily. The only reason that it was abandoned by Buenaventura in 2005 was just simple economic concerns. Gold dipped below $700. It cost them more to produce an ounce during that era. And so ultimately they just said, this doesn't make business sense for us. But something that I have to highlight is that since that time, the artisanal miners, the local community in the region, has continued to produce from the mine for over 19 years. So it's still a viable mine by all means, and especially at $2,000+ gold. It's very attractive, but again, just on a small scale, so it doesn't meet the needs of, we'll say, big fish don't bother themselves with small fish. First and foremost, there's two main paths to revenue that I can define today, although there may be a third that comes up in the near-term future. First and foremost, the artisanal miners today are still producing. And when we were on site in October of last year, we witnessed that they were producing something along the lines of 70 to 100 tons of high-grade ore per week and shipping that. So they're shipping that product hundreds of kilometers away, which obviously there's a logistical cost, there's all forms of different types of risk involved in that transport. But the simple answer is that they're still producing today. And as we've gone to the community while we have a federal level production permit to extract up to 350 tons per day ore, the community still has to approve us for surface rights access. This is the way the Peruvian government kind of separated, federal level mineral rights, that's how the government makes its money, and a fairness quotient to the communities where people have to, from the communities, negotiate with the companies that want to access mines. So we're expecting that plus minus the end of July, so only about a month and change away from today, that the community will be ratifying their charter, which means they brought in a new mayor. They have to have their own standing agreement amongst themselves as a community to have a legal pen to approve our contract, which we've requested a 10 to 15 year surface rights access contract, which would give us the ability to start producing from the mine and extracting that ore and moving it down the highway. Okay, number one. Number two, the second contract that comes in conjunction with that is that the community itself, with their artisanal mining group, they have requested the ability to work side by side with us. So effectively, we grant them permission to continue doing the work they are doing. What comes along with that, my level one of revenue generation, is that ultimately there's a clause in that contract, and it's standard boilerplate legalese for what happens in Peru, that they end up selling their product to us, and then we are the ones that sell it because it's our mineral rights, their surface rights. They do the work. They still get the lion's share of the profit from that. We get a wholesaling commission. So ultimately, level one of generating revenue from this is by virtue of those contracts being completed, their ore extraction and sales become our sales. Okay. Level two of that is that what we intend to do, we're working with a number of institutional investors to fund both an underground and surface level drilling program, which will prove up both a resource, so we can say we have so many ounces in the books, as well as PEA, so a mine plan and an extraction plan, as well as a life of mine calculation, to start extracting at larger, more commercial levels. And that's what's going to start, at least in bulk sampling, by the end of this year, drilling through the summer and fall, analysis, start blasting, and then by end of year, at least bulk sampling, so that after the rainy season of next year, so starting end of Q1, start of Q2 next year, we can really ramp up into larger commercial production, 25, 50, 100 tons a day, and so on. First and foremost, we built the simple ethos of the company to generate revenue and on a consistent basis. Lucero definitely provides the foundation and backbone for that. So our most, I guess, aggressive moves and most important moves inside the company, at least over the next year to 3 years, are definitely going to be focused around the backbone of, number one, getting Lucero to production, number two, stabilizing that, and operating at an efficient level. So we take the most advantage of the high-grade gold that comes out of Lucero, and the current market prices, whether they stay at this level or higher, it's very economical for us. Having said that, there are definitely some regional acquisitions, whether directly in Peru or across Latin America, and we have a great group of both business minds, mining heads, operational heads that can help us operate at a far larger level. So again, baby steps in the first couple of years. Let's get up and running and get our weight up, and then after that, we'll see what we can do for additional M&A in the whether directly in Peru and or across the Americas. Very specifically, like I've already mentioned here today, we're going to look at number one, completing the contracts with the community. That's one of the biggest leverage points because it lets them get back to work just as much as it gets us to work. Number two, from that, we're going to be drilling out both underground as well as from the surface to prove up a resource value and a PEA on Lucero itself, which I believe is going to be a major value lever for everybody to understand, hey, you have ounces in the books, you actually have a defined resource, as well as a plan to be able to extract it. And that should lead to bulk sampling by the end of this year, which is a revenue generating item, as well as into next year after the rainy season, which typically is December to March. We should be looking at ramping up commercial production starting, let's call it March to April of next year. And our idea through that is laddering up 25, 50, 75, 100 tons per day in terms of growing that up to a point of 200 tons per day. Keeping in mind that when Buenaventura owned this asset, they were producing at an average rate of 150 tons per day, while the federal permit is 350. They were producing at 150 and yielding on average 40 to 50,000 ounces of gold equivalency per year. We can all run some quick math. 50,000 ounces at $2,000 gold, it's a $100 million top line business. Pretty happy to get somewhere close to that, if not exceed that, with the amazing team that we have and the amazing assets we have.